Good afternoon and welcome to Money Control. I'm Karunya Rao. With me is Manisha Gupta and she has a new update for us in terms of commodities. The spotlight today is on cotton prices. What's happening there?
20-month lows in the international markets. It was not too long ago, Karunya, you and me were having a discussion on how cotton is trading at 11-year highs in global markets and all-time highs in the Indian markets. But what a sharp decline from those kind of levels. For the international markets, from 158 cents a pound, we've come to 94. And for the Indian markets, we've seen a 42% of a decline as well. So from an all-time high here as well, we've declined quite sharply here. If you look at the Indian markets, we tend to talk about it in tons and bale and candy. There's just so many ways to measure it. So 110,000 rupees per candy to just about at around 85,000, and this is the current price. There are a lot of trades happening for the month of October and November, which are happening at 65,000 as well.
Okay. So this further downside anticipated. Why is that? Are there no takers?
No takers right now because one, the recession fears are way too much, and the second is there is availability now in the markets, and it's all about the interest rate hikes as well. Markets do not know what they are getting into. Should they be, borrowing more money? How will the work happen from here on? And when it comes to, when we talk about non-agro space, we say copper is the barometer of key economy. And when you look at the agriculture commodities, it actually comes to cotton. If you're talking about recession, then you have to take a look at the cotton prices. There is not very strong demand for clothes, furnishings, furniture, fabric, and that's weighing on.
Not a good sign to work with. But what about the sowing status? What's happening there domestically?
So the markets were anticipating that with the kind of high prices that the farmers have seen, you will be looking at higher sowing, the kind of availability which is quite bleak, and that's exactly what we have seen as well. So last year sowing was 12 million hectares. We've done 10 million hectares already right now, and the anticipation is that you will be looking at the acreage go up by 12%. So the sowing looks good as well. So then you're preparing yourself for more cotton as the harvest.
But why are we sowing more cotton if the demand is not as great?
That is because the farmers do realize, do understand that as and when this scenario phase is over, you will see cotton demand coming back as well. That's exactly what we saw in the last year and this year, the first half as well. The pent-up demand will start coming back. So if there is no demand right now because of the recession fears, there will be demand that you will see by the end of this year. You will need more warmers. You will perhaps get to all of those things by the end of this year.
And more clothes.
More clothes.
But what about consumers, consumer companies? Are they buying right now, or will they see any benefit of this at all?
They would, right? Because if they do not are holding enough stock, then they would want to buy, but they wouldn't want to hold it because this decline may just about continue for another couple of months as well. The yarn companies are not buying because there is not too much of a profit margin from them. But when it comes to cloth companies, there is a bit of a buying. Not so much because the major cloth makers are clearly Bangladesh, Vietnam, China, India for that matter as well. So many of these clothing countries are not buying cotton as much as they used to. There is a definite decline onto that. So everywhere that you look, there's a bit of a more bearishness here. For the textile companies, if there is no demand, even with the cotton prices going down, I think it's a double whammy there.
So better to stay clear whether it's trading with cotton or buying into or investing in any of these textile companies right now?
It does look like that. I was talking to some of the industry participants in India and abroad as well. They said that another 5 to 7% of a decline can be worked on from here as well.
Maybe they're waiting on the sidelines to see and then buy.
Yeah, and the other thing is that, after what Canada has done yesterday, 100 basis points of an interest rate hike. Philippines has done that. Singapore has done that, a huge one coming in from that. So ahead of 27th of July, I think all roads,
on the edge.
They are. All roads lead to that.
And all commodities right now looking pretty weak and bleak. Yes. Let's see how things pan out post that 27th of July. But right now, this is what it is, guys. Thank you so much for tuning in. We'll be back again with a new update on commodities at 1 p.m. tomorrow.